Hello and welcome to our first edition of CMS Forex News in the new year. I'm market analyst Nick Nassad. Today is Friday, January 2nd, 2009. We begin with data from Australia, where the country's manufacturing sector contracted for a seventh consecutive month in December. The manufacturing PMI increased 1 point to 33.7, but measures below 50 still indicate contraction. The new orders and unemployment subgauges fell, though at a slower rate than in November, while production, inventories, and supplier deliveries fell faster than in November. In a second release, the RBA Commodity Price Index was up 34.4% on the year in December. Stocks around the world welcomed the new year with gains. Stocks in Japan were up 1.1%, London's main index was up 3%, and the US opened with the Dow climbing 150 points by noontime Eastern. The rise in equities helped risk appetite and boosted the fortunes of the Aussie against the yen. Commodity prices, including oil, were up as well. From its low near 63.10, the Aussie was up 180 pips to set a new high for the week near the 65 level. In Europe, the Eurozone's manufacturing PMI slid to 33.9 last month from 35.6 in November. This was 0.6 points lower than the preliminary release of 34.5. The fall puts the index at its lowest level since the report was introduced in 1998 and shows that the Eurozone recession continues to get deeper. It's also the seventh month in a row that activity in the manufacturing sector has shrunk. The index of activity in the UK manufacturing sector saw a slight increase to 34.9 from November's record low of 34.5. However, it's the eighth month in a row that the sector shrank and reflects the difficulties facing factories as retailers cut back on orders in the face of weaker demand from both at home and abroad. Still, today's data beat forecasts of a further drop in the index, which may imply that the rate of contraction may be slowing. UK mortgage approvals fell to the lowest level since at least 1999 in November. Lenders granted 27,000 loans for house purchases, about 4,000 lower than in the previous month. The figure was below expectations and continues to show the woes facing the UK housing sector. The data from the Bank of England did see a surprise uptick in mortgage lending, which rose to £740 million from £477 million in October. This is still far from where these levels were before the financial meltdown in autumn, and it remains to be seen if banks begin lending more again. Meanwhile, housing prices continue to fall in the UK as well. For December, prices were down 2.2% on the month, which was below expectations and brought the annual rate to 16.2%, a drop of 16.2%. That fall in the annual rate was the largest since the index was launched in 1983. The average home price is now the same as it was in August of 2004, which on a bright note has put house prices relative to earnings at its lowest level in 5.5 years. The pound-dollar pair fell 270 pips from its high near 1.4650 overnight. At the New York Open, the pair bounced off its recent support near 1.4375 and paired about 50% of its fall. Last week, we saw this pair fall below support at 1.4670, which then turned into resistance. We may be establishing a new sideways range, but a break of the recent support would signal a further fall in the pound. The euro-pound pair clawed back some of its losses from Wednesday, reclaiming the area near 0.96. This too was a 50% retracement from the most recent fall. New support has now been established near 0.9475, which was old resistance last week. In the US, manufacturing ended 2008 in a grim state, falling to its lowest level since June of 1980. The manufacturing index fell 3.8 points to 32.4 in December, from 36.2 in November. All the main subgauges showed further deterioration, with new orders down to their worst level since 1948. The prices index continued to fall, showing an ongoing retreat in inflationary pressures. The euro-dollar pair saw back and forth action today and stuck to a much smaller range than we saw in Wednesday's trading. The pair began forming a sideways 130 pip range with support near 1.3850, which is where the pair traded near 2 p.m. Eastern, an overall gain for the greenback for the session. The dollar saw even better success against the yen. The dollar-yen pair rose from Wednesday's close near 90.80, fell back down to test resistance turned support near that level, and then took off about 100 pips during the New York session. That put the pair at 91.90, a new 3-week high. Stocks in the U.S. continued gaining in the early afternoon, with the Dow up 200 points or 2.3%, and the Nasdaq and S&P 500 up around 2.5%. This helped fuel the dollar strength in the pair in New York trading. With oil prices up as well, as we mentioned before, the US dollar-Canadian dollar pair fell 180 pips in favor of the loonie from its session high near 1.2275. The pair found support near 1.2065, which was lower than recent support this week. Oil prices rose $1.65 to $46.25 a barrel as the risk appetite extended to commodities and commodity-linked currencies like the loonie, Aussie, and Kiwi. With manufacturing data out of the way, next week brings reports on services from Australia, the UK, the Eurozone, and the US. Some other important releases for the first half of the week include retail sales from Germany, the flash CPI from the Eurozone, and US factory orders. And that wraps up our broadcast. Thank you for joining us here at CMSFX.com, and have a great weekend.